Good morning, Paul Georgie from Allendale. It's Friday, July 1st. Well, we've got the USDA report out of the way, and we've seen more follow-through pressure this morning because of that. Let's start, though, with some news stories overnight. ICG, the International Grain Council, has increased China's output of corn by 10 million metric tons this coming year. They're increasing corn acreage in China by 1%, losing some soybean acreage. So that could be supportive to the soybean complex. We're also getting mixed news stories here this morning that China has bought 1.6 million tons of U.S. corn out of Beijing Newswire. Another Newswire is reporting that they did not buy any corn. So conflicting issues there. We're going to have to wait till the USDA export numbers come out here at 8 o'clock and continue to watch for indications that China did buy, if they did buy some corn. However, that news story certainly isn't helping futures. We got September contract down the limit here at the 7:15 time frame, 38, 39 lower in the December contract. Well, let's talk about the USDA report a little more. And when you look at the numbers from face value, definitely a game changer, definitely bearish if you're going to take the numbers at face value. When you start throwing numbers that they gave us yesterday into the balance sheet, it takes the ending stocks for the 2011-12 year up to 1.4 billion bushel carryover from 700 that we had just a month ago. And for this current year, the 2010-11 marketing year, it raises ending stocks there to 1 billion. Well, that's not something that we believe in anyway. We think that it will be much less than that. They're not going to add the total quarterly stocks increases to the balance sheet, just as they didn't take it away the last quarter when they reduced those total quarterly usage. So we think that when the numbers get settled out, it gives the USDA an opportunity to make some adjustments down the road where they can adjust for the Missouri River flooding, for the lack of planting in North Dakota and South Dakota and Minnesota. There's able to make some adjustments there and get us back into line and maybe back to levels where the trade thinks we should be right now. It also gives us a chance and gives the USDA a chance to adjust for yield as we move through the growing season. So there's some positives out of it, but initially the numbers got to be construed as bearish. And one of the factors that we're most concerned about is how these numbers will affect the overall attitude of the funds, of the investment traders that are involved in the commodity markets. It will more than likely put pressure on it, as we've seen markets yesterday come under a lot of pressure. There was some liquidation yesterday. We'll expect that we probably will see some more liquidation as we move forward here because of the margin clerks at the FCMs. They will get involved here very soon and require producers or traders that were along this market to either come up with the money or get liquidated. So those are pressures that we could see. And we've got also some fundamental issues. Weather is going to be kind of ideal for much of the Midwest here the next several days, as we're looking for some heat to move in and then moisture and some cooler temperatures after that. Another factor that we got to watch today anyway is the technical side of things. December corn, for instance, has been the leader to the upside in many commodities. Today we've got to be concerned about its technical support. We're going to take out the 620 area, which was key support for several weeks. You've got $6 as psychological support, and then you've got 585 as the 200-day moving average. So if we close below that today, or it looks like we're going to close below it, could trigger some more sell stop and some more liquidation in that contract. So that's something to watch as you go into the close today. Soybean market, however, much more positive. The cut acres there, it, however, is being dragged down by the weakness in the corn. So soybeans in general look to have some positive things going on, but when you have liquidation that we seen yesterday in the corn, that carryover could increase into other and move over into other commodities. In the beef complex, cutout values there were marginally unchanged yesterday, slightly lower. We're still waiting for cash markets to trade. Feedlots are hoping to get 113, 114. Packers bids have been in that 111, 112 area, which steady money from last week. The futures markets have kind of given the Packers a bit of an upper hand there, as we've seen pressure there yesterday. We also going into a short kill week next week. That is giving us a standoff. We expect some trade here today, more than likely in that steady range, unless we see some further pressure here in the futures. In the pork complex, kind of the same story. The market's being led around by the futures market anyway is being led by technical traders and fund liquidation and in people moving out of those long positions. As we've seen yesterday, we've seen livestock prices under pressure. We've got a short kill week next week. Cutout values have been a little lower yesterday, nothing too significant, but trend there is that we've got tighter supplies, but it's an attitude that we've got to deal with here over the next several days to get back into that reason for traders to be long this thing. So look for a lot of volatility here today again in the commodity markets. We've got position evening. You got to watch the money flow. Which way is money going here to and more than likely we expect it to be to the sell side as prices as we go into the close here today before a long weekend. We wish you a very happy and joyous holiday over the 4th, a safe one. We wish you a very successful trading day, and we will talk to you on Tuesday morning. Thank you.